shares in global vaccine makers fell sharply on Friday. Markets were spooked by US President-elect Donald Trump's pick to run the Department of Health and Human Services. He's chosen Robert F. Kennedy Jr., who has previously spread misinformation on vaccines. Kennedy, who is a vaccine skeptic, has been criticized for making false medical claims, including that vaccines are linked to autism. Several medical scientists on Friday said they were alarmed that vital vaccination efforts could be undermined. Shares in Britain's GSK were down over 3% at their lowest in more than a year. AstraZeneca and France's Sanofi were also down more than 2.5%. GSK and Sanofi offer a range of vaccines, including for flu and childhood diseases. Bavarian Nordic was hit hardest as it fell 16%, though it was also hurt by third quarter results. The drug maker produces a vaccine for Mpox. The Danish firm's CEO said they were concerned Kennedy could drive vaccine skepticism. German-listed shares of BioNTech were down more than 1/10. The company is Pfizer's partner on COVID-19 vaccines. Analysts pointed to a Kennedy interview on NBC in which he said that he would not take away available vaccines. But they added the overall prospects for biotech development ventures were seen as weakened. Europe's healthcare sector was the worst performer in early trading, down 2.2% at its lowest since April. Spirit Airlines has filed for bankruptcy protection. Monday's disclosure follows a long run of quarterly losses and significant debt for the pioneer of no-frills air travel in the US. Spirit's troubles deepened after the collapse of its $3.8 billion planned merger with JetBlue Airways in January. It also endured the impact of RTX engine issues that grounded many of its aircraft. Spirit had been losing money despite strong travel demand as it struggled with bloated costs. A court filing Monday showed the airline listed its estimated assets and liabilities in the range of $1 billion to $10 billion each. Spirit has entered into an agreement with its bondholders expected to reduce total debt and provide increased financial flexibility. The airline has received commitment for a $350 million equity investment from existing bondholders. The bondholders will also provide $300 million in debtor-in-possession financing. Together with available cash, that is expected to support the airline through the Chapter 11 process. Spirit expects to be delisted from the New York Stock Exchange in the near term. The company started out as a long-haul trucking firm in 1964 before shifting to aviation around 1983. The discount carrier became popular with budget-conscious customers, but ultra-low-cost carriers have struggled since the pandemic. Travellers have preferred to pay extra for a more comfortable journey as they pursue experiences.
U.S. stocks slumped on Friday after Federal Reserve Chair Jerome Powell signaled a slower pace of interest rate cuts, and investors reacted to cabinet selections by President-elect Donald Trump. The Dow dropped 0.7%, the S&P 500 slid 1.3%, and the Nasdaq plunged 2.25%. Shares of vaccine makers and packaged food companies sank after Trump said he would nominate Robert F. Kennedy Jr., who has spread misinformation on vaccines and criticized ultra-processed foods, to head the Department of Health and Human Services. And shares of defense firms and government contractors also fell, partly on concerns about Trump's picks earlier this week to head a new Department of Government Efficiency. Rob Hayworth is Senior Investment Strategy Director at U.S. Bank Asset Management Group.
There's been such a positive reaction post-election that I think it's tough for markets to not be a little surprised at how far the policies may go and maybe exhibiting some caution, as we're seeing in the pharmaceutical stocks today, as we're seeing in some of the other companies that have kind of reacted to the picks, and that's the market's really trying to interpret how far will the agenda go, how deep will policies go.
Shares of Moderna and Pfizer sank, weighing on the S&P healthcare sector, which hit its lowest level since May. The Consumer Staples Index also hurt by the nomination news, was dragged down by stocks including Monster Beverage, Lamb Weston, and PepsiCo. Among other movers, Applied Materials tumbled more than 9% after the U.S. maker of chip manufacturing equipment forecast first-quarter revenue below Wall Street estimates.